We all know what happened with the massive sell-off. We're seeing a little bit of stability. Is this just the setup for another leg lower? Do we retest those lows that we saw, or do we feel like this is the all-clear signal, for, at least for now?
Well, I think obviously yesterday's market action doesn't say, we've completely put it past us. I think there's certainly possibility for more downside. It's really all about the 10-year, right? And how people feel that, and that's, that inflationary reaction. So, as you mentioned, all the reports are coming out. If anything comes out that looks like the economy is running too hot, is disappointing, indications that the Fed would raise rates and have that 10-year go even higher. And, we're really looking for the yield on the 10-year to break above 3.5 significantly and really go, maybe 3.6 and possibly even 4%. And that could certainly push the markets down, just because the valuations did get a little high-ish or higher during the run-up during June and July. And so if we look at where we were trading on just on a valuation basis back when rates were 3.5% before, the market's about 14% higher on a valuation basis. So certainly anything where that pushes those yields up much higher, we could see another downside or retreat back to those June lows in the equity market.
Higher yields means cash is coming out of the economic system, the machine, so to speak, of the American economy. Does that then mean that recession is inevitable?
It's certainly more likely. I think we're really set up for a recession at this point. The amount that the Fed has to raise rates at this point, we really do need to slow down. Now this, I think it's really more a question of, and look, we're already in a technical recession. It's already happening. So is it a deep recession? Is it something dramatic, or is it just 3 or 4 quarters where we still have unemployment below 5% and still constant job growth? Sure, very possible. For me, it's really about what's happening on the corporate side. Are we going to be able to see profit growth going ahead? Because right now, when we look at forecast and the type of revisions that we've seen back down, 5% profit growth, clearly below what we're running at inflation right now, really isn't attractive for stock investors.
Erin, we've just got about 10, 15 seconds left. You have a top pick out there in your universe?
So with all this downturn, I'd say I really like Centene Managed Healthcare. I think it's a nice safe bet. And United Healthcare, another managed healthcare. Both have done really well, both in the up periods and the down periods, just high quality names, and use those down days to buy them on the cheap.